we can see a lot of similarities between our current cycle and 2017, especially when taking into account and comparing the previous cycle, that kind of double top muted cycle we had with COVID, and it was a little bit all over the place. So what I can do is share a chart just outlining the different growth we've seen in Bitcoin cycles from each cycle low. So what we can see here is this is literally just the Bitcoin price action in each cycle. So the red line here is the first Genesis cycle we had. The orange cycle was the double peak cycle into 2013, 2015 when we bear cycled. And then the blue one is the 2017. So I'll remove these two and our previous cycle. What we can see is we're actually currently outpacing that 2017 cycle that saw Bitcoin grow from beneath $200 to near $20,000, 100x return. And we're currently outpacing that. But even disregarding the percentage returns, we can see that price action is really closely mirroring this cycle. So it is really interesting to see the same kind of peak timings and trough timings and the halving events, which occurred at very similar stages of the cycle, to see maybe this is something we can take inspiration on to get some anticipation of how this cycle could play out.
Hey guys, welcome back to the show today. I'm here with lead analyst for Bitcoin Magazine Pro, Matt. How are you doing today?
I'm great. Thank you very much for having me. It's great to finally be on the show, being a long-time watcher. So yeah, just really appreciate the opportunity to come and speak to your lovely audience.
Thank you again for sharing your time with us. But for those that don't know you, do you mind to give us an intro and tell us a little bit about yourself?
Yeah, 100%. Yeah. So I'm the lead analyst at Bitcoin Magazine Pro. So we are the data and analytics branch of Bitcoin Magazine, who don't just do the publications, but the Bitcoin conferences and everything like that. So we try and provide on-chain data, macroeconomic data, market signal, technical stuff, just to try and help clarify your investing and analysis, not just for timing your buys and sells of the market, even if you're just dollar cost averaging in or just appreciate Bitcoin as a technology. I think it's really interesting to see all the activity happening on chain in real time that kind of gives you that X-ray insight into Bitcoin and the health of the network.
How have you found Bitcoin? How you stumbled into it?
Good question. So I think I have a fairly typical story to something that may resonate a lot with your audience, in that I initially got into Bitcoin wanting to make a quick buck. I'll be honest. It was in 2017. So I was the guy that bought near the top, thought I was a genius because I made a few percent profit, watched it all tumble back down, sold at a loss, which was, pretty devastating. But at the time, I knew there must be something to this. If people are making money, there has to be some way I can try and do the same. I was working in IT at the time. I have an IT background. So I studied everything I could about Bitcoin, not just about the trading and investing side of things, but Bitcoin as a technology. And then at that point, I really understood how significant Bitcoin is as a technology, as a protocol. And then from there, I stumbled into on-chain data, which was really kind of coming into fruition in kind of 2018, 2019. And since then, I've just been investing using this data, trying to help other people understand. And prior to being the Bitcoin Magazine Pro lead analyst, me and a guy called Positive Crypto on Twitter, Philip Swift, we were running Look Into Bitcoin, which was one of the first kind of widely publicly available free on-chain data platforms. And since partnering, we've just kind of expanded our outreach to, like I said, try and help people understand on-chain data a little better, regardless if you are trying to make a profit like I initially was, or now kind of transition to just trying to strategically accumulate as much as I can.
I've seen you posted an article, which I thought it was really interesting. You also made a video. By the way, guys, as always, in the comments, in the description, you will find Matt's channel. And you talked about a potential repetition from 2017 to 2021 in this cycle.
Yeah, so one thing I like to say is on-chain analytics, which is just the real-time buys and sells and transfers we see on the Bitcoin network, is really just mass psychology quantified. It seems very complex and everything, but really it is just seeing the irrational fear in markets, the irrational greed in markets, people buying and selling. And a lot of this psychology has pretty observable patterns. A lot of people like to say history doesn't repeat, but it often rhymes. So looking at Bitcoin, we can see, obviously, everyone knows of the 4-year cycle theory, where Bitcoin typically follows these 4-year changes with, a year or two of big uptrend, a year of downtrend, and a year of kind of choppy price action that may be influenced by the halving event and other factors. But regardless, what we can see is there are very obvious repeating patterns in Bitcoin's price action, investor behavior, etc. So we obviously like to look to previous instances of cycles to maybe get some understanding of what Bitcoin could do this cycle. So it is interesting you bring up 2017, because from a price action perspective, from a data-driven perspective, macroeconomic perspective, given we're about to see a president coming back into office that he was previously in during the 2017 cycle, we can see a lot of similarities between our current cycle and 2017, especially when taking into account and comparing the previous cycle, that kind of double top muted cycle we had with COVID, and it was a little bit all over the place. So what I can do is share a chart just outlining the different growth we've seen in Bitcoin cycles from each cycle low. So what we can see here is this is literally just the Bitcoin price section in each cycle. So the red line here is the first Genesis cycle we had. The orange cycle was the double peak cycle into 2013, 2015 when we bear cycled. And then the blue one is the 2017. So I'll remove these two and our previous cycle. And what we can see is we're actually currently outpacing that 2017 cycle that saw Bitcoin grow from beneath $200 to near $20,000, 100x return. And we're currently outpacing that. But even disregarding the percentage returns, we can see that price action is really closely mirroring this cycle. So it is really interesting to see the same kind of peak timings and trough timings and the halving events which occurred at very similar stages of the cycle, to see maybe this is something we can take inspiration on to get some anticipation of how this cycle could play out. I don't think we're going to see 100x returns and a $1.5 million Bitcoin, but if we can kind of set the timings of this cycle similar to what we've seen previously to maybe top out in October, November later this year, I think that aligns with quite a lot of people's expectations of a Q4 2025 cycle peak. And yeah, from there, it can just kind of help us, again, understand the market dynamics when people are getting overly excited and demanding more, and that kind of overheated conditions where we see this massive exponential exuberant rally, which unfortunately can't be sustained forever before an inevitable bear cycle. So it is really interesting to see the comparisons between this cycle and the previous cycle. Something I can also bring up the 2021 cycle where we had this double top. Again, topped at a very similar time to the 2017 cycle, about 1,060, 70 days from cycle lows to cycle highs. So as we currently sit, we're around 786 days into this cycle. So yeah, a good few months left, but it'll be interesting to see how the remainder of this cycle plays out and how much more we can mirror that 2017 cycle.
Thank you so much for sharing this data with us. A couple of questions here. So we have seen for the first time ever going above the all-time high prior to the halving. So are you expecting a shorter cycle perhaps instead of topping up in October, maybe November at the end of the year? Maybe we could finish before?
Good question. I think the all-time high we set prior to a halving event, which we'd never set before, was kind of an early cycle, exuberant rally post ETF announcement and them going live. When you see billions of dollars inflowing into a market, obviously everyone gets incredibly bullish, and for good reason. Just from a fundamental perspective, the thing that really drives Bitcoin's price action, it isn't lines on a chart or moving averages or whatever you think. It's supply and demand. If people want to buy an asset and the supply is constant or even decreasing post a halving event, then price will increase and reflect that. And the ETFs really open the floodgates for big institutional, sophisticated, smart money investors, if you like to call them, coming into the market. But I think that was kind of nullified, that early exuberance, by the 7 to 8 month choppy consolidation. Let's be frank, incredibly boring price action we saw following that. And what we're seeing now, I think, is actually quite similar to what we maybe saw in previous cycles, such as the last cycle when we broke above $20,000 and the cycle before that when we broke above $1,000. This big psychological 100K level is going to take some breaking down. I mean, we cut through it like butter once we first get past it, but now we've retraced a little bit. But this is actually, again, kind of healthy to see expectations kind of reset, a new foundation set at $100,000. Having this slow grind to the upside, this long, choppy consolidationary periods is good for the market. It resets people's expectations, allowing new capital to flow in. If you're seeing the Bitcoin price 50% higher than what it was last week, you may be a little hesitant to invest more or dollar cost average in, and especially institutional investors don't go chasing highs as price runs away from them. So if we can set around $100,000, make this the new benchmark, the new baseline, the new $20,000, then that really sets expectations for going hopefully considerably higher throughout the remainder of this year.
When I see headlines saying Bitcoin crashed to $95,000, I'm like, okay, great. I mean, it looks good for me.
Yeah, can you imagine that headline like a few years ago, just reading Bitcoin crashed from above $100,000? It seemed crazy, but now it's the normal. I think if we'd have ran up post ETF from $30,000 immediately to $100,000, we wouldn't have the cycle we have now. We'd have had a much larger retracement, which I think is quite different to this cycle. Obviously, as the market cap increases, we see a decreased volatility just because the amount of capital flowing in and flowing out massively increases. But I think because we have had this slow grind up without this excessive runs to the upside, we're not getting these 30-40% drawdowns that historically were quite normal during bull cycles. So even this 15% Bitcoin crash to the downside compared to previously is actually pretty small, and it shows the strength in BTC to be able to continue holding these highs even after these big moves to above $100,000. And I don't know about yourself, but to be honest, I was quite surprised when we broke 100K that I thought maybe like the headlines in traditional media would say Bitcoin into six-figure territory and that kind of thing. But it wasn't really like that. I think because everyone kind of knew it. It sounds crazy to say, but everyone knew Bitcoin was going to do this at some point. It didn't really take anyone by surprise. And now everyone's got the sights on $200,000, $500,000, even higher. It almost at this point seems an inevitability. It seems Bitcoin has quite clearly grown past the point of speculative asset, as we're seeing, well, as we now see tens of billions of dollars from these institutions coming in. This isn't an asset that is going to fizzle out and die and stick around at just a few $1,000s. This is clearly something with a huge amount of potential, which we've all known for a long time, but now it's almost been reaffirmed by the fundamental events we've seen over the past 12 months.
Like you mentioned, in 2017, I remember 40% correction, 35% correction. We've not experienced such a correction yet. I mean, I don't want to jinx it, but it looks like it's more calm in either way. And are you expecting like a banana zone blast off at some point in 2025, or you think it's going to go slowly and steady towards, I don't know, Valhalla?
I think it's a good point. And I think there's also similarities between this cycle and 2017, as this seems to be a more spot-driven rally, which is considerably healthier and more sustainable. In 2017, it was spot buying, which is just buying actual underlying BTC, but that was mainly by retail traders. People like me and you, people probably trying to make a quick buck. Whereas this time it is once again driven by spot buying. But this isn't retail traders like me and you. These are the biggest institutions in the world buying tens and hundreds of thousands of Bitcoin. These are people that have expectations of holding onto this asset for, like you said, decades, which is incredibly healthy for the space compared to the previous cycle in 2020, 2021, where it was mainly kind of leverage and debt driven. We saw this huge inflow of money into the economies in form of stimulus. And then we saw platforms like FTX obviously trying to leverage up as much as they could. And it was kind of an artificial rally we saw to some extent. Whereas this one, again, mainly spot driven. I do still think we'll have this irrational, massive banana move to the upside. I think, again, it's human nature to see an asset really start pumping, to see people FOMO in, especially retail, who, as of right now, don't seem to be completely back and convinced into Bitcoin's longevity and potential. But again, I think when we start breaking new all-time highs, $110,000, $120,000, we are going to see that capital start trickling back in. And at that point, I do think we will have a mania phase like we did in 2017.
I'm going to ask you the $1 million question. I mean, do you have a target when it comes to top for this cycle?
Everyone has kind of rough ideas in the head, and I do have one. I definitely say it's better to react to the data than try and predict the future. If we're seeing people selling, if we're seeing lots of profit taking, incredibly high funding rates, that type of thing, that's definitely a good indication that we're getting a little overheated. And if you look at something like 2017, if we do have a mania phase like that, at the start of December 2017, so about 2 or 3 weeks before the top, we'd just broken through $10,000. And everyone was saying, wow, we're into 5-figure territory. Maybe now we're starting to see a peak forming. And price doubled in just a couple of weeks after that. So really, even if we're starting to see some warning signs at 150, just as an example, that doesn't necessarily mean that that's getting close to the top. It could very easily double in the weeks following that. So I think if I had to give a baseline estimate right now, $170,000 to $180,000, but that's changing. I mean, if you'd have asked me a few years ago, I'd have maybe said $140,000, but maybe I'm kind of getting swept up in all this bullishness. Realistically, as much as I have this rough number in my head, like I said, once the warning signals start flashing, I'm going to be taking some profit.
Like it or not, guys, I mean, what the US does, the world follows. So if they're leading in some ways, I think many other countries are going to follow. Are you expecting like a country FOMO into a potentially strategic Bitcoin reserves?
As much as I would like to say it's definitely going to happen, I'm trying to keep grounded and rational. I do think even the fact that we're having the conversation that as a nation like America could be accumulating 1 million Bitcoin is, again, crazy, something you couldn't have anticipated a few years ago. So if that does or doesn't come into fruition, I think just the fact that that is a possibility is already incredibly bullish for the space. Will it happen? I don't know if it'll happen to the extent of 1 million BTC being accumulated over that short space of time. Do I feel like maybe BTC that had been seized previously through other means will be kept on a balance sheet and potentially expanded upon a little slower? Yeah, I think that's a more realistic possibility. But as I said, if we do see that coming into play, then maybe the price prediction I gave before, maybe a lot of the models we have, we need to factor that in. We need to factor in 1 million BTC is going to be accumulated. 1 million BTC is going to be held for a considerable amount of time, and that's really going to change, like I said, the supply and demand economics of BTC. And as for potentially other nation states accumulating, obviously we have El Salvador buying pretty much every day. I think they still are. On top of that, it wouldn't surprise me if we had already not seen, but if in a few months' time it comes out that other nation states have already been accumulating to some extent. I won't say names, but I know a lot of people in the space who have some suspicion that certain players have been adding some BTC to their balance sheet. And again, this kind of maybe plays into the fact that while we are seeing Bitcoin climb higher and higher, we're not getting these big drawdowns. There is so much interest that anytime we see a 10-15% retracement, every institutional, potentially nation state buyer is happy to accumulate BTC at these prices. And I think a big part of this is retail have traditionally thought of accumulating BTC as I'd like to get to zero point 0.1 Bitcoin, or I want to hold 1 Bitcoin, for example. A lot of nation states and institutions, they have a different mindset when it comes to this. Whereas rather than saying we want to hold 10,000 BTC, they'll be saying we want to hold 5% of our balance sheet in BTC. They're not really going to be considering price too much. They're not going to say, oh, but it's considerably higher than it was a few months ago. I don't think they'll be chasing gains after massive moves. But once we get retracements and it gives them the opportunity to say, yeah, well, let's get 5%, 10% of BTC on our balance sheet as this hedge against bad monetary policies globally, then that really could be coming into fruition to, as we talked about, see even more BTC being scooped up, maybe never to be sold again.
Not having a position in Bitcoin would be literally a short. You don't have to be like Michael Saylor and go balls to the walls and all in, but having a small allocation, 2%, 1%, even to 5%, like you said, especially if you are a monster of a company who has a ton of cash on the bank account. So I think we're going to see an interesting few months coming in. Do you have a portion of your portfolio you play the cycles with? How do you mean by taking profit?
Yeah, so this is slightly controversial, I know, in the Bitcoin space, and a lot of people do give me a little backlash on this, but I'm pretty vocal. I will be selling some Bitcoin when it comes to the top. That doesn't necessarily mean into USD. It may be rotating into the other hard assets like gold or real estate, etc. But this isn't a binary thing. I think a lot of people, when it comes to their investing, think I need to buy 100% and I need to sell 100%. Whereas for me, it's a much more granular, compartmentalized process. I'll have a portion of capital that I'm never going to touch. I literally have my entire pension in Bitcoin. That's something I won't be able to touch for decades. So I always have some skin in the game. I get paid in BTC and I strategically dollar cost average into more BTC. But there is a portion of my capital which, using on-chain macroeconomic market cycle technical derivative data, I believe that there are some signs that we may be topping out. We're scaling out with my positions. Maybe it just be 5%, 10% of my Bitcoin with the ambition to scale back in after a 50, 60% drawdown makes sense to me. It allows me to attempt to reaccumulate BTC, more BTC than I would have done just by holding, by just taking a trade every few months, every few years. It doesn't have to be a process where I'm in front of the charts every single day. What you'll find with a lot of these metrics is there are great opportunities to accumulate BTC at the tail end of bear cycles and great opportunities to scale out. But you may be sitting on your hands for 2+ years, which a lot of the time you just need to be patient. And this is why I'm strategically dollar cost averaging in as well. So I'm always trying to do something in the space. But in terms of selling, it's not something I'm doing every single day. It's going to be at some point to say, yeah, let's maybe rotate into other assets. Maybe we're a little bit overheated right now. And as I said, a lot of people will disagree with that, but I stand by. If I can take some profit and we see a 60% drawdown, I don't even really need to be that close to the cycle peak to have the opportunity to scale in at a lower price.
Yeah, Must, tell me about it. Like we discussed off camera, I mean, I'm basically in the middle of a tornado, because if you are a pure maxi Bitcoiner, you hate me because sometimes I mention Ethereum or Chainlink or Cardano. And if you are an altcoin guy, oh, that guy's a Bitcoin maxi. Just because I have a portion of my portfolio, which is really minuscule, like a small percentage of my portfolio that I play the market with. Again, everyone can do whatever they want with their money. That's the beauty of it. Your keys, your coins. So I also proactively decide to take a portion of my portfolio, which is really small, and it's a calculated move, and play the market, because I do believe, like you said, we have cycles. So why not taking advantage of it? It's risky. I know. That's why it's a small percentage of my portfolio. That's the whole point, right? I get paid in Bitcoin, so it makes sense.
So you have a couple nice charts that I think might kind of outline our thesis behind why we're maybe trying to do this to some extent. So firstly, this is one of our most popular charts. It's called the MV/RV score. And as I mentioned, on-chain data allows us to track every single transaction, every single wallet on the Bitcoin blockchain. So we can see essentially when people are buying and when people are selling Bitcoin. And again, this is kind of just mass psychology quantified. We can see when people are at excessive profits or maybe at excessive losses. Everyone knows to buy when there's blood in the streets, but how do you define when there's blood in the streets? Well, using something like this, which is the MV/RV score, we can really clearly define areas where accumulating makes good sense and when potentially scaling out makes some good sense. So this is calculated by taking into account every single Bitcoin at the value it was last transacted at. This is pretty much the average accumulation price or cost basis for every investor on the Bitcoin network. So this is currently the realized cap, so it's multiplying that by the circulating supply of Bitcoin, but it currently sits around $42,000. So you just factor in every single Bitcoin on the network. The average cost someone paid for that was about $42,000. So that puts everyone in about a 2.5 times profit, 2.5 nearly times profit on their position. And what we can do is almost standardize that unrealized profit and loss. And then once we account for the volatility for Bitcoin, it comes to this MV/RV score, the market value to realized value score. And as you can see, it really clearly defines when this black line, which is the price or market cap, is beneath this realized price or cap, indicating the Bitcoin price is currently beneath the average accumulation price of every investor. Sorry, this is literally blood in the streets defined. This is capitulation in real time when a majority of people are losing money. This is where you need to act as a contrarian. And again, a lot of indicators point towards this acting against this herd mentality. When everyone's fearful, when everyone thinks Bitcoin's going to continue going down. I remember when we were at 15K, everyone was calling for 12K, 10K, 9K or lower. At this point, we can see a huge amount of realized losses on the network. We can see people are fearful. We can see irrational human emotion, which I say irrational, but it's completely natural. It's completely normal to see pain and see fear and not want that to continue. But this is where you need to rely on data, fight against your natural instincts. And these were the most opportune moments to be accumulating BTC. And again, when we see people at considerable profits, when people start taking screenshots on their accounts to say, look how much unrealized profit I have, look at the color of Lamborghini I'm planning to buy, etc. These are usually good indications alongside other on-chain metrics and profit taking that we can see that maybe people are getting a little ahead of themselves. And like we can see in something like the 2013 double peak cycle, we can top out, have a little bit of retracement. I know people are talking about a super cycle, or if we're seeing the US accumulate 1 million BTC, we may see a top, we may see a little bit of retracement before we can have another top even higher. But I think this really outlines when at least a pullback may be incoming, at which point, yeah, of course, we need to pay for rent, we need to pay for food, we need to buy things. Even if you're not selling, there are clear periods of time where rotating out, or at least considering profit taking to some extent, does make sense. And another great way to outline this, because obviously when we're seeing unrealized profits, everyone says, oh yeah, of course, I may have been at this amount, but was anyone really taking action at that point? Was anyone really selling? A lot of people don't believe that you can properly do this over multiple cycles, but we can look at something like the value days destroyed multiple, which is a little bit more complex. What this is taking into account is what we call the velocity of transfers of Bitcoin. So, for example, if I held 1 BTC for 100 days and then transferred it, I would add 1 coin days destroyed. If I held 0.1 BTC for 1,000 days, it would equal the same 100 coin days destroyed. So what this does is it weights the transfers of large BTC holders who have been holding for an incredibly long period of time. These are the people that were buying Bitcoin at $100 and waited a decade or so before they begun taking some profit. And what we can see is these long-term experienced traders are actually pretty good at timing the market. We can see when we have these huge red spikes, it indicates that they're transferring these large long-term held BTC for a considerable amount of profit. And we can see these usually occur at big market peaks. People tend to start cashing out these experience money when we are a little bit overheated because they've seen this many times before. And this is where we see the transfer of wealth from experienced hands to new market participants. When people like me in 2017 was buying the top, I was buying Bitcoin from someone who bought at a significantly lower price, had seen this all happen before, and knew when to start scaling out. And we can see this in mass, and the same is true for the downside. When we're seeing these incredibly low values on this metric, long-term investors realize the opportunity cost of holding BTC into the next cycle for considerably higher prices. So this isn't all just theoretical. We can see people are taking this data into account and acting on it and doing so in a profitable manner.
I love this. And I mean, how would you approach taking profit? I mean, do you have a DCA strategy out? I'm sure you have a bunch of different metrics. And when they're going to align all together, are you going to start your dollar cost average out?
It's not an exact science. I have little niche strategies and stuff, but just as someone who may want a rough idea of what to do, I definitely look for confluence. I never would rely on one metric because, of course, you can get false signals, like when we saw Mt. Gox, for example, move a huge amount of BTC to start repaying previous users last year. That had a big spike in on-chain metrics, so that may have been a bit of a false signal on certain charts. So what you need to do is look for confluence. You need to take into account a handful of metrics, not just looking at on-chain data, but like I said, macroeconomic, market cycle, derivatives, etc. And once these all start flashing warning, start flashing danger, it doesn't necessarily have to be a binary sell everything. What you can do is say, right, today I'm going to set, for example, a trailing stop loss of 2%, and I'm going to sell 1% of my Bitcoin. And every single day you set a new trailing stop. That way, if price continues to rally exponentially higher, it doesn't matter, your trailing stop's following price up. At some point, we're going to have a little bit of a retracement. That's fine. But I think when it comes to accumulating Bitcoin, not many people think, yeah, if I just put 100% of my Bitcoin in at the exact bottom, then, I'll have the best entry price. Everyone kind of agrees that that's pretty much impossible to do. Everyone says to DCA, scale in, average in. When we get to good opportunities to scale into the market, do the same. But when it comes to selling, there's almost this narrative of, oh, well, I'll just sell 100% when the market peak is in. No one does that. It's incredibly difficult to do. What you need to do is dollar cost average out. When we start getting these overheated conditions, do the exact same strategy you would do for accumulating Bitcoin, but in reverse. Start selling 1% a day, 2% a day or something. Every time we get a warning signal, set up a trailing stop loss, and just accept that as long as you can scale out gradually towards that market peak, you are going to outperform a vast majority of people who are trying to time the market. And again, this doesn't have to be with your entire Bitcoin portfolio. It certainly isn't going to be with mine, but with a small enough portion that I can reaccumulate at lower prices, it kind of course, has that risk, but also the opportunity to, again, accumulate more BTC than I ever would have had just by holding.
I've done a couple of cycles myself, and I made so many learnings. I like to rephrase it instead of saying mistakes. I paid my tuition. One of my major failure point was to expect the 100,000 the previous cycle. I was like, I'm not selling until at least we get to 100K. Well, guess what? It was all fun and bubbly and unicorns and rainbows until everything crashed heavily. And I've seen my portfolio, literally, I didn't sell anything because of course I have the conviction, but it wasn't easy. Watch your entire network because I'm all in. And I knew it would have gone back up, but it would have taken another cycle. So I was like, oh man, now how am I going to survive now? So you have to consider and factor in so many variables.
Of course, yeah. And that's not even factoring in the more complicated aspect of taxes and the fees you'll maybe face if you're holding ETFs or other Bitcoin products, or funding rates if you're holding leverage positions. There's a million and one different factors, but I was the same in the previous cycle. This is why I like to say it's better to react than predict, because after we saw that first peak and started coming back up again, I'd already scaled out a decent amount of my active part of my portfolio. But then everyone was saying, it's going to 100K, and obviously I'm super bullish on BTC. Of course I saw that as a possibility, but the data pointed towards one thing. So even though I wanted to believe something else, I almost acted like an investing robot. I did exactly what the data told me to do. Turned out fairly well. And a lot of people now who are saying, oh, never sell your BTC. It's really difficult to hold on to an asset that goes down 70%. And people praise Saylor. I completely appreciate and respect what he's doing in the market. Everyone's calling him a genius now. Let's see what the headlines are when the MicroStrategy shares are down 60, 70, 80+%, it's going to be a different narrative. The number one thing that changes perception and narrative is price. Everyone's a genius in a bull market and everyone's an idiot in a bear market. So if you can sustain and hold through 70% lower prices, just think of how that would look in your account. Of course, take into consideration your incoming wealth, how old you are, how much risk you can take, if you're diversified into other assets. There's a million one different things, but yeah, don't think in binary things. Think in granularity. Think in, scaling out different parts of my portfolio.
I love Michael Saylor. I think he's a genius. I think he's a great guy, but he's not in a cave with no chair and no shoes on. He lives a very comfortable life, which means even if Bitcoin drops 50%, he's going to be okay. Like me, for example, all in, if everything goes down 70%, I won't be okay. So This means I'm, quote, overexposed. And when people are saying, oh, don't sell Bitcoin, it depends on the situation, right? So again, if you are into a place where you are comfortable and all the money you have in surplus are invested in Bitcoin, who cares? I have assets, I have my beautiful house, I have a yacht, I have an income. Oh, who cares? I don't have to sell Bitcoin. But if I'm all in every 4 years into cycles and I have to pay myself, sustain myself, maybe I don't even have an income because maybe my Bitcoin is my income, I have to use part of my portfolio, in this case Bitcoin, to sustain my living. Otherwise, how am I supposed to manage, So it's so subjective. And again, people are so quick to, quote, judge. But I like what you said. We have a lot of similarities here. So yeah, thank you for sharing your data and your thoughts.
Yeah, of course. There's the saying, no one ever went broke taking profit. And of course, that is true. And I mean, now there may even be means to not necessarily sell your Bitcoin. Maybe you could just hedge with some selling some put options to buying some put options. I'm not much of an options expert, I'll say, but that way you don't necessarily have to sell your underlying Bitcoin. Maybe you could get a Bitcoin collateralized loan into fiat to potentially buy back higher, receive back your collateral with minimal interest. And that way you're never actually selling your BTC. There's going to be different means we can do this, but yeah, as we've kind of both agreed upon here, there's times when at least considering the fact makes some sense.
I'm also looking forward to the borrow against your Bitcoin without losing custody, of course, because that's otherwise it's not worth the risk. If I have to gain 20% because I lose custody, I'm not interested. But I'm sure time will open, specifically with the new jurisdiction coming into the US and Trump taking presidents and all this kind of stuff. There's going to be a lot of opportunities for us to borrow against the Bitcoin safely. After all, is what real estate did, right? So you couldn't initially borrow against your home, but then banks allow you to remortgage your home and create a market. So I'm sure we'll see a lot of products coming out from legit sources. And when that time comes, we won't even have to sell the Bitcoin like the meme says with Morpheus and Neo from the Matrix, right? So I'm also positive. But thanks, Matt. Honestly, it's been an absolute pleasure having you on the show. Thank you so much for joining us today. I really enjoyed our conversation.
Great, me too. Thanks for having me. And yeah, we should do something like this again in the future. It's been a lot of fun.
Fantastic, guys. Thank you so much for watching. As always, of course, in the description, you'll find Matt links. Make sure to follow him, and we'll see you on the next one.